As you know, our fiscal year ends on June 30th. So on June 30th of 2023, our fiscal year ends, and we are required by state statute to complete an annual financial report that is submitted to the Department of Education. This report has been completed and it has been submitted. However, as it was referred to, this is what we call the unaudited report, because ultimately we will bring you an audited report after the audit is complete in the fall. And so there will be additional adjustments and corrections. However, I'm very pleased to present this report to you today. It's very good news. We have ended the year with a really strong general fund balance. As you can see highlighted there on the enclosure, just over $24.3 million balance. You have our revenues and expenses noted there. We had revenues of in the general fund of $100.6 million as compared to our $98 million budget. And we had expenses of $94.6 million as compared to our $100 million budget. So that's what is reflected in the bulk of the report. I did want to highlight and make sure to mention that there is an accounting adjustment that is made on our annual financial reports. It's to do with what's called GAAP, Generally Accepted Accounting Principles, which I know you don't want to hear about. But we have to record the revenues that are contributed on our behalf by the state and the related expenses that go against that. For example, the health insurance that's paid at the state level, the retirement that's paid at the state level, etc. So this report does not reflect that, because that is not anything within our control, and it's not anything that is reported on to you on a regular basis, but it is net of those expenditures. I also wanted to highlight that we had made the adjustments previously based on the completion of the fiscal year 22 audit to our previous financial reporting, and we adjusted that through the beginning balance of this report. So that allowed us to have an ending contingency balance of just over $16 million. I want to briefly explain the difference between contingency and fund balance without, again, rolling your eyes or boring anyone. But a fund balance is a little bit of a misnomer. For those who are used to dealing with business and industry, a fund balance is simply the difference between your assets and your liabilities. So if you look at the total amount of what you own, your cash, your assets, and what you own, and you subtract what you owe, that's what the word when we refer to fund balance. Contingency is the amount of savings that we have that at the state level you may hear referred to as a rainy day fund. When you talk about the state level, you may hear it listed as a surplus. Those are the funds that we have available to the district. So we are at 16 million, or just right at 16% of our budget. Have other fund balances that are significant that are listed there for you at the end. And then you have a copy of the full report. As I mentioned, we will update this report and work with our auditors. Our audit is scheduled to begin on August the 21st, and we're looking forward to working with our new auditors. One of the things that I specifically wanted to mention, referring to your earlier conversation, is I'm preparing some financial analysis for Dr. Radford to share with you for the August meeting, and it will be based on where we ended up this year in order for me to be able to speak to you on what I would recommend moving forward financially. But one thing that I think is always worthy of notice is how school districts spend their money. And when you look at general fund expenditures, we spend 80% of our general fund budget on salaries and benefits. And that's right in line with what any other district does. It's generally 80 to 85%. Some districts are higher than that. When you look at the other required services, such as maintenance and transportation, and you look at the other required supplies and materials that are allocated out to our schools, the total of all of that is 94%. So when we look at our budget, we really only have 6% of our budget that has any discretion over it for the other type of expenditures. And that's the reason why we spend so much time looking at a revenue forecast. That's why we'll spend a period of time discussing our tax rates that I would recommend to you based on where we ended this year, and also look at what the state allocation through SEEK will be. So this will be the basis of the conversations we have moving through the month of August. So I hope you have time not only just for tonight to review it, but to continue to review it, and I'll provide you additional information through Dr. Radford as we get ready for the August meeting. But I'm happy to answer any questions that you might have.
You said transportation. What percentage do you think that is?
Well, transportation, again, I've taken salaries and benefits out because I'm saying if you look by types of expenditures. So transportation is about 4%, maintenance is about 5%. That's, again, excluding the salaries of the people in those departments. That's just the run for the materials and the parts and the supplies, and the gas, well, more diesel, excuse me, for transportation. Other questions?
If we could get the state to do their part with the transportation, how much more money would that give us?
So that's a great question. I'll try not to get on my soapbox about that one, Mr. Dodson.
Well, what do they currently fund?
Is it
So,
70-30?
I'll give you a little historical perspective on that, because as you all know, I've been around a long time. So I'm from one of those few people who remember when the state used to fully fund transportation. You don't find too many of us around anymore, because that is what is intended from the original CARA lawsuit, and that's what is listed in the regulation. That is a reimbursement of an expense. It's not meant to be an allocation from the general fund state budget. And so I remember when it was 100%. Over time it eroded, and it got down as low as 58%. And so districts are required to provide transportation to any student living more than a mile from school. It's an equity issue, allowing kids to get to and from school. And so the state requires that. They had always funded it, but it dropped as low as 58. We're now back up to somewhere approximately 70%, but we still have a long way to go.
What kills me is they pick and choose what part of CARA they want to fund. They want to fund SEEK, but they don't want to fund transportation.
We used to call that, Mr. Dotson, we used to call the transportation cut back in my days as superintendent. We used to call that the below the line cut because nobody saw it but school districts. You see SEEK because it's the amount that's allocated per pupil. Transportation is a separate funding formula that's distributed differently, and you know, they'll have a district report the total transportation expense. That's called unprorated transportation. But then when you get your actual funding from the state, you'll have a prorated amount of that you actually get. And again, it's been as low as 58%.
So Dr. Shelton, what is that 30% that we don't get? How much money is that for our district?
Well, I'm going to refer you actually, just because I want you to be able to see this. Let me get you to the right page here. If you'll flip to, in the financial report, or on your screen, go to on the financial report that's attached there to page 8 of the annual financial report, you'll see the total cost of transportation, which is $7.5 million. And that, again, that does include salaries and benefits. Let me be clear. That's the total cost of transportation for us. And ours is very well managed. As you can see, Mr. Webb does an incredible job, and so we actually are at only at 90% of what we spent compared to what the budget was, because the budget was $8.4 million. But at 70% at reimbursement, do my math here, that's about 5.2 million, so it's about $2.3 million will be short funded this next year, because it's always 1 year lag.
So Tom, what would you, if you had to estimate, I know you said the 7.5 included salary and benefits for transportation people. If you had to back their salary and benefits out of that, what would you guess we were short? What's closer to the real number?
I'm not sure I followed you back in the salaries and benefits out. But if you back the salary and benefits out of that is 4.4 million out of the 7.5. So
Okay.
it's 3.3 million is what the remainder of our cost is to provide those services. Does that answer?
Yes,
Okay.
thank
I just
you.
want to make sure I
When was the
answered.
last time the state was 85% funded?
For transportation?
Not 100. When was the last time it was higher than 70?
I'm trying to remember when 2004, 2002 was the year I started as superintendent, and 2004, from my memory served, we were still nearly at 100%, and it started falling from there, and it's fallen ever since. So I'm going to say mid-2000s, 2004, 2006. Now, I will tell you that the Department of Education and their education advocacy, as well as the other K groups, that is a line item that comes up every year. And this coming spring is a legislative session where they'll be setting the biennial budget for the next 2 years, and it is a high priority item to get full funding for transportation, as it should be. You should be fully funded for services you're provided you're required to provide.
Dr. Sheldon, could you give us some other examples of items? Because I know, if I'm not mistaken, professional development used to be paid for and reimbursed by the state, and that's no longer done either. Can you give us some other items that?
Textbooks, safe schools, professional development. I could prepare you a list and send to Dr. Radford.
I would absolutely love to see a list of what used to be funded and is no longer funded by the state.
So that's
Well,
good.
and I would tell you, even though I completely agree with what Mr. Dodson was saying about SEEK, if you listen to what you're being told, there are historic investments that have been made in education, and the education funding level in the state is the highest it's ever been. But what I would tell you is that we have not been fully funded for education since prior to 2008. And there's plenty of reports out there to document that. The funding is not kept up in the SEEK base. In 2008, at the Great Recession, the SEEK base stepped backwards, and it's never caught up since.
So basically, between now and the session, we need to be getting hold of our representatives and saying, hey, you don't need to fund transportation.
Well, they need to fund transportation. The other thing that I would encourage you, and again, I can get a list of these type things to Dr. Radford for you, is that another thing that happened is, we're currently getting funding for full-day kindergarten, which we've been providing for a good while in the district. Those of you who've been around a while may remember we used to only get 50% funding because it was based on half-day kindergarten. So last year, the last 2 years, it was added into budget language to fund full-day kindergarten, but it's not been built into statute. So it could go away at any given time. So we want to advocate for at least to be in the budget, funding for full-day kindergarten, but we would also want to advocate for it to actually be moved into statute to where it's required to be funded. You all are getting me on my favorite topic. Dr. Radford knows this is my favorite long-term topic to discuss.
And Dr. Sheldon, appreciate you sharing this in this report. I'd share with the board, last year estimated if we got 100% funding for transportation, as Dr. Sheldon just kindly talked about it, the difference, if that we are currently 68, 70%. If we've got to 100%, that's estimates about $2 to $2.5 million. And when we look at giving raises to staff, those are reoccurring funds. So we have to make sure that we can sustain that and not overextend. And as Dr. Shelton talked about, rainy day funds, every district's required to have that, and you want to make sure that you have that. You are that we're in really good place. We do not. No school district or organization should ever use their savings account to pay the mortgage, and that is what we have to be very mindful of, while at the same time addressing needs and staying and being good stewards of taxpayer dollars, which I think is one of the things that each of our board members have really touched on tonight with some of the questions, and I appreciate that.
Board members, any other questions?
I should point out one other thing, if I could, that I mentioned what our revenues and expenses were there, budget versus actual, but I didn't explain the variances there that are listed, and I wanted to mention that to you real quickly, is that you see revenues, we are 2.6% over budget, which is what you always want, right? You always want to budget conservatively, and you always want your revenues to come in higher than what you actually budget. You don't ever want to, I don't ever want to come back to Dr. Radford and say, I'm sorry, we over budgeted revenues and we're not getting all the money we need. So we were over by 2.6%. And then expenses, we were under by 5.6% what was budgeted, which you also always want. You always want to budget to spend more than you actually do, so you have a little bit of slack, so to speak, in your budget. So I wanted to highlight those two variances. We were under budget in expenses and over budget in revenues.
And Dr. Shelton, could you touch on the in FY20 what you're reporting on is FY22 AFR and
23.
I'm sorry, 23
Right.
and 22. Sorry, my years. Salaries and benefits, we've reduced. You reported tonight. Can you touch on that and the significance of where we were and where we are?
So as you all know, I started with you in January, and one of the first things that Dr. Radford asked me to do was do an analysis of where we were at that particular point. And first thing I asked him to let me do was to work with our auditors to complete the fiscal year 22 audit, as we did. In fiscal year 22, we had budgeted to spend 84% of our budget on salaries and benefits, and we actually came out at 82, which is a good variance, but is very reflective of the changes and the different policies and structures that have been put in place here in the last 2 years. And then this past year, in fiscal year 23, we budgeted 82% for salaries and benefits, and we actually came in at 80%. So in the last 2 years, there's been a 4% reduction, while the raise and the step that were mentioned earlier were both given. And so that's significant, because when you're looking at a budget that has so little discretionary expenditures in it, you can really kind of do one of two things. You can, increase revenue, or you can, decrease expenses if you're trying to increase salaries. And we've been able to increase salaries while decreasing the overall cost to the district, which is significant.
So it sounds like we have a little wiggle room on those teacher raises.
The only thing that I would caution you, I don't disagree with that statement, but the only thing I would caution you is, until I get to finish, is that we know we've been funded from the state based on 2018-19 average daily attendance. That's been held constant through the pandemic. We now know we're going back to being funded on actual average daily attendance. And as Michael would tell you, we have lost enrollment and lost percentage of attendance, which will reduce our state funding. So we have to look at what our local tax revenue will be in order to offset any loss in state funding. We will be receiving a certified assessment from the state that will show us the total property values for the state and will give us the option of what tax rates to recommend to you. And I'll bring all of that to you in August.
Is some of that cost savings from COVID money, ESSER funds, or is that just general fund budget
This is just
money?
general fund,
All
right?
right, thank you.
Yeah, I separated completely. ESSER funds are in Fund 2, the Special Revenue Fund.
Good deal.
Board members, any other questions? Dr. Redford, any other comments?
Dr. Shelton, thank you for your work and diligence on this, and really appreciate the report.
Thank you.